Hey everyone, I'm Bradford with the Penny Pincher of Personal Finance. First, make sure you hit that like button so you know to make more videos like it. Today, I'm going to give you a walkthrough on how to fill out the IRS Form 1040 for tax year 2021 with a specific example of you who are single and with no dependents. Really the only situation where I would recommend you consider filling out the 1040 yourself. You have a W-2 job, say you work at McDonald's or something like that, where you're getting paid and you're not being paid as a contractor with 1099. As your tax situation gets more complicated, you start having investments, say you start your own business, things are going to get outside of the scope for the majority of people, and using some sort of tax prep software or hiring out with a tax preparation company or a CPA is going to be your best option to make sure you get your taxes done correctly. So with that said, let's actually jump into the forms and start going through how you would fill it out in this situation. So I have a bunch of different forms open up here in PDF, and I have a link to all of the forms that you could potentially need for your tax season down in the description below. But the first one that I will point your attention to is going to be the 1040 instructions. Now, while a lot of things with taxes are really complicated, I think the IRS actually did a pretty good job laying this out in plain English, what you need to do in a line-by-line format in terms of how you fill out the 1040 correctly. Now, a couple things in here I want to point out is so as it does go in, it's like, okay, what are the contents? So you can easily skip around. Some other things, it tells you when do you actually need to use the different schedules that accompany the 1040 and if those apply to your situation or not. Some important things to read here is it goes through, all right, what is new compared to the past calendar year, which is what we're filing our taxes for in 2021, what is different from 2020? Some of the big things, and you can read through this and see what exactly is applicable to you, but it talks about the economic impact credit, the 2021 recovery credit. It states what the standard deduction amount is. So this amount is also stated in the actual 1040 itself, but if you're reading through the instructions, it is also here. So it also goes through a whole bunch of other things that you can read on your own as to whether or not they are applicable to you. With this situation of a single taxpayer, no dependents with a W-2, the vast majority of these changes are not going to be applicable. And another thing in here that they talk about is the filing requirements, because not everybody's actually required to file taxes if you make under a certain amount. And so it goes through here and it tells you what you really care about. But then the quick sheet in terms of what's going to be applicable for most people is a good rule of thumb is if you make less in the past calendar year than what the standard deduction is, you don't have to file taxes. So jumping from that, now that you're aware of the 1040 instructions, let's actually look in the 1040 itself and walk through it. So the first thing that you have to address is what is your filing status going to be? In this situation, we're picking single, and if you have a question about what any of these tax filing statuses actually mean, they are explained in the instructions that we just mentioned. So put your first name, last name, your social security number, where do you live, presidential election campaign, $3. I've never done it, but if that's something that you're interested in, feel free to. Something that is new this year compared to 2020 is now the IRS does care about your cryptocurrencies. They say specifically, did you receive, sell, exchange, or otherwise dispose of any financial interest in any virtual currency? Read that to mean cryptocurrencies. So if you bought something in 2020 and you just held it for all last year, you can mark no. But if you were exchanging cryptocurrencies over this past year, you will have to mark yes, and that opens up a whole nother can of worms. For simplicity's sake, and to keep this video shorter, I'm gonna check no. Going through here, standard deductions. So if you're a dependent or they can claim your spouse as a dependent, this is going to be most applicable to like first year college students. So last time this applied to me, I was a freshman in college. So because I lived with my parents the first 6 months of that year while I was still in high school, they were able to claim me as a dependent. After that, they weren't able to claim me because they weren't providing for the majority of my living expenses. And you can read whether or not you are falling into that category of somebody else being able to claim you as a dependent in the instructional form. Some other things that deal with here, are you blind or are you over 65 years old? And you need to check those. In this situation, I'm mirroring John Doe, pretty close to my age of being 27, so that's not applicable. If you have any dependents, you'll put them in here. First, last, social security number, relationship to you, and then some tax credits that might be applicable. But now down here and starting in line 1 with what most people are going to care about is you're going to begin transferring information from your W-2 that your employer provides onto this form. So the first line here is you're going to pull it directly from your W-2. It's what was your wages, salaries, tips, etc. for the past year. John Doe in this situation is going to make $40,000. The next line, tax exempt interest, isn't going to apply to most people, but most people will have some sort of taxable interest, and that's mostly going to come from if you have a checking or savings account that's paying interest on your money. In this situation, it's $50 for John Doe. You know if you do have that taxable interest because your bank, credit union, whatever you have, will issue you a 1099 INT for interest. The next line is going to be dividends. Again, exempt really isn't a factor here. ordinary dividends. If you're receiving a 1099 DIV for dividends, whether you're invested in stocks or mutual funds that are paying out dividends throughout the year, you'd have to put that here. IRA distributions, so that's if you are pulling money from your Roth or your traditional IRA, not applicable to most people unless you're retired. Same thing with pensions and annuities, as well as Social Security benefits. So the next thing here is capital gain or loss. If you were invested in the stock market and you had a capital gain or loss because you sold your investments, you would have to put that here in terms of what the exact amount is. I'm going to put no for simplicity's sake again. Other income from Schedule 1, line 10. Let's look at the Schedule 1 real quick. I'm not going to go into deep detail, but this is just other forms of income that you might need to include on your 1040. It could be alimony, gambling income, cancellation of debt. And basically, you go through this entire sheet. If you have any sort of income other than what you're receiving from your W-2, you'll put it in here, and it walks you through in terms of what you actually need to add up to get down to line 26, where it's going to give you your final number. Jumping back over to the 1040, saying John Doe had no other sorts of income other than his W-2 job. So you're going to add up your sources of income. That's going to get you into line 9. Now, once you have your total income, if you have any of those adjustments from Schedule 1, you'll put that in here. You subtract them. That's going to be your gross income. Now down to standard deduction. The vast majority of people, the standard deduction is going to be better. The only time where the itemized deduction is going to be better is, say, if you run your own business, so you have a lot of deductions from your business itself, as a sole proprietor. If you own a home and you're able to get that interest deduction on your mortgage, as well as the depreciation over the time frame of your home. If you have a lot of gifts to charitable causes that are tax deductible, and all of that adds up to more than the standard deduction, by all means itemize it. Just realize that it does leave you open to the possibility that if you are audited, you'll have to provide the receipts and documentation showing that your itemized deductions are legitimate. Standard deduction is what John Doe is going to claim. 12B, charitable contributions. This is in reference to cash donations. You're limited to up to $300 a year, and that is broken down further in the 1040 instructions with regards to you can also take $300, up to $300 in cash deductions in addition to the standard deduction. So you'll add these together, put that in 12C. 13, really only applicable if you're in business, so it's means 0 here. Something else I want to mention that I should have addressed earlier is that you can put either a 0 or just leave the spot blank. They both have the same meaning. So then you're going to add all these things together for potential deductions, $12,550. Then you're going to subtract this taxable deduction or the standardized deduction from your gross income. And that's going to leave us with $27,500 of taxable income. On the second page, we're 50% done. So for line 16, this is where you're going to figure out how much tax do you actually owe. And that's going to come from back in the 1040 instructions. So we'll hop back over in there, come down here to the tax table, and then you're going to need to scroll down so that we're looking for $27,500. We're going to scroll down, find $27,000. Now that we have that here, we're going to go down to the amount between $27,500 and $27,550. We're going to go over to the single filing status, and so we get 3104 is going to be how much money that we owe in taxes for that calendar year. We're going to take that, drop that back in line 16. 17, that's going to come from Schedule 2. That's just going to be additional taxes that you might need. In this situation, it's not applicable. You can add 16, 17 up. And then 19 through 21, those are some additional tax credits that you could see from like Schedule 3, additional credits and payments. Feel free to review those, make sure they're not applicable to you. We're going to say none of those apply. You're going to do some additional addition, subtraction. 22, if you don't have any of those additional credits, it's going to be the same as lines 16 and 18. Same thing for line 24. If you don't have any sort of credits or additional taxes, it will be the same thing. So you should have 4 numbers that are the same in lines 16 through 24. Now you're going to come down here and you're going to see what was your federal income tax that was withheld from your W-2. So every month your employer is required to take out a certain amount that you can coordinate with your payroll department if you want to increase your deduction or lower your deductions. So we're going to say John Doe paid $4,000 in taxes over the previous calendar year. You're going to have some other sources of income. If you did have a 1099 job, say you drove for Uber Eats or you did DoorDash, something like that, where you're considered a contractor instead of an employee, you'll receive a 1099. So next, you're going to be adding some things up. If none of those 1099 jobs apply to you, 25D is going to be the same as 25A. Coming down here, estimated tax payments, really only applicable if you are self-employed or you run a business. 27A, earned income and tax credit, reference the instructions if that applies to you. Again, non-taxable combat pay for 27B. Did you serve in the military in a combat zone that does have a tax exclusion? you can talk to your military pay office finance to figure out if that applied to you or not. Prior year earned income, not applicable in the situation. Again, these are going to be some more tax credits. You're going to put 0 all the way down for John Doe in the situation. You're going to add all of them up. Do you have any other payments or credits? No. So it's just going to be the $4,000 that were withdrawn or withheld from your W-2. That's going to go on line 33. Now, the question here is, did you overpay or did you underpay in taxes? Just figure out, did you pay more in taxes than what you owed? Do that math. So it's 4,000 minus the 3,104. So John Doe is owed a tax refund of $896. How much do you actually want refunded to you? Always put the full amount unless you just want to give a donation to the federal government, at which point it would probably be more fun just to light that money on fire. Put in, is it going to be a checking or savings account? You want your money direct deposited in, your routing number, account number. If you want any of that money applied to your 2022 tax estimate, if you're just a W-2 employee, this doesn't apply to you. It only applies if you run a business and you're required to pay quarterly tax estimates. Amount you owe, if you had the other situation of you underpaid your taxes, you'll report this here, as well as what is your estimated tax penalty, and you can figure that out in the instructional form. Coming down here, third-party designee, not going to apply to most people. You're going to sign, put the date, what's your occupation, and then this PIN, if this is your first time filing taxes, you won't already have one, but if you have paid taxes in the past, you will have a PIN that the IRS gave you that you'll have to put in here that is associated with your account. And then this last element right here, so the paid preparer use only, that's only if you have a CPA, a tax prep office, or you're doing a tax preparation software, they're going to fill this in. It does not apply to you. Now, once you know how you actually fill out the 1040 and you've gone line by line, you're not actually just going to use this document, this PDF. You're actually going to go over to the IRS website. So you type in IRS Free File. That's going to give you 2 options where you can either use the tax prep software or you can use the free fillable forms. If you want to fill it out by yourself, you're going to click on the free fillable forms and that'll give you a 1040 within the IRS's own website. You have to create a new account each year, but that's how you're going to e-file your forms. Now, hopefully that demystifies how actually filling out the Form 1040 works. And even if you decide not to fill out your own taxes, this will give you a better understanding of how the entire process works. And if you are paying somebody else to do your taxes, what you're paying them for in the first place. Now, with all that said, if you're still feeling a little bit overwhelmed with taxes, which I do with my tax situation, and you want to get your taxes filed completely for free, check out our video here, which has a complete walkthrough on how you actually use the IRS Free File Program, and you're able to get your taxes filed in one of the tax prep softwares completely for free if you meet a few of the requirements. I want to thank you for joining me today, and until next time, just remember to pinch a little.